Welcome to the Deep Dive. Today we're zeroing in on Palo Alto Networks' 2024 annual report.
That's right.
Our goal is really to cut through the corporate speak and get you the essential insights. How is this cybersecurity heavyweight actually doing?
Uh,
And what are their plans?
Exactly. Think of it less like just a dry report and more like a roadmap.
Okay.
Where they've been, where they're headed. We'll pull out the key strategies, the financial health, and how they plan to create shareholder value.
All right, let's dive right in then. Palo Alto Networks, it's a huge name in cybersecurity, obviously.
Mm-hmm.
To really get a handle on what drives them, we need to look at their main goals. The CEO laid out three key things:
Okay.
transforming network security, delivering comprehensive cloud-native security, and revolutionizing security operations. And here's the kicker. It's all powered by what they call precision AI.
Right. Precision AI.
And this feeds into their big overarching strategy, platformization.
Yeah, and that platformization idea is really interesting. It's not just selling individual products. It's about offering this tightly integrated suite of security tools.
Like an ecosystem.
Exactly, a security ecosystem. And precision AI is like the brain behind it, making everything smarter, more proactive.
Okay.
Whether it's protecting traditional networks, securing the cloud with Prisma, or streamlining security operations with Cortex, that integration is key.
That makes sense. So let's break down how they organize the business around that. First up, the network security platform. And this isn't just, your basic firewall. It's an ML-powered next-gen firewall with AI built in to spot threats in real time.
Right, much more advanced.
Then there's SASE Secure Access Service Edge. That combines network security and wide area networking into one cloud service. Super important for remote work.
Absolutely essential today.
That includes Prisma Access and Prisma SD-WAN. Plus, they have a whole bunch of cloud-delivered security services. Let me see. Advanced threat prevention, Wildfire for analyzing new threats, URL filtering, DNS security, IoT protection.
That's quite a list.
Yeah, Global Protect for remote access, DLP, AI Ops, that's AI for IT Ops, SaaS security, AI access security, and tools to manage it all, like Strata Cloud Manager and Strata Copilot. It's, comprehensive.
It really shows the breadth they're aiming for, covering all the bases in a customer setup.
Right.
And by integrating these, they're trying to offer a more unified defense. And those management tools, Strata Cloud Manager and Copilot, they tackle a big headache for security teams, managing tons of different products. Simplifying that helps security.
Definitely. Okay, then the second big piece is Prisma. They really push this as their all-in-one cloud security solution.
Which is critical. I mean, if you're not securing your cloud environment these days...
You're asking for trouble.
Exactly. Prisma tackles the specific challenges of cloud protecting apps, data, managing access, compliance, all that. The old idea of a network perimeter is kind of gone, so security has to be built in the cloud.
Makes sense. And the third main segment is Cortex. That's their AI-driven security operations platform.
SecOps.
This is where AI and automation really come in, helping security teams sort through the just overwhelming number of alerts they face.
Yeah, the key thing with Cortex is moving towards being proactive.
Instead of just reacting.
Precisely. Using AI to predict and prevent attacks, not just clean up afterwards. That's a big shift, letting teams focus on strategy instead of drowning in alerts.
We should also mention Unit 42, their threat intelligence and advisory services.
Ah, yes, the threat hunters.
Right. The researchers tracking threats, the incident response teams, the consultants advising companies. They even offer managed detection and response and managed threat hunting. Kind of like having your own cybersecurity intelligence agency.
And the intel from Unit 42 is gold. It helps clients directly, sure, but it also feeds back into making Palo Alto Networks' own platforms better. They learn from the attackers to stay ahead.
Okay, so looking across the report, you start to see their overall growth strategy take shape. Platformization, we've hit that one hard.
Definitely central.
The focus on innovation, especially precision AI, is obvious. They also mentioned key partnerships. IBM and Accenture come up.
Right, which suggests they're integrating with broader IT solutions, expanding their reach through big players.
And you can infer from the revenue growth that they're investing heavily in sales and marketing. Plus, they mention an M&A strategy, mergers and acquisitions, with a focus on integrating those acquisitions well.
Yeah, they seem willing to buy technology and talent to speed things up. All these initiatives show they're actively working to stay ahead. Platformization makes their offerings stickier. AI keeps them competitive. Partnerships open doors. M&A fills gaps quickly.
But it's not purely about the tech, is it? They spend a good bit of time on human capital management.
Which is smart in this field.
Over 15,000 employees globally as of last July. They talk about a people strategy focused on development, investment in people. Things like their FLEX Learn platform.
Training and development are key.
Yeah, structured onboarding, learning paths for early career folks, trying to attract diverse talent, unconscious bias training. They even have employee network groups, ENGs. Apparently, over a quarter of their workforce is involved in at least one.
That's significant. In cybersecurity, talent is everything. You can have the best tech, but without the right people.
Right.
So focusing on attracting, developing, and keeping good people is fundamental. It suggests they know their people are a major asset.
And they're also highlighting ESG, environmental, social, and governance.
Becoming standard practice for large companies.
They have an ESG council led by the CEO, board oversight through specific committees. They mention transparency through things like CDP climate disclosures and social programs like cybersecurity education and disaster relief.
It reflects that broader responsibility companies are expected to have now. It can help with reputation, attracting talent. Even investors look at this stuff.
Of course, it's not all smooth sailing. The report hints at challenges, mostly through the risk factors section.
Always important to consider the risks.
Things like the constantly evolving cyber threat landscape, attackers getting more sophisticated.
A constant battle.
Rapid tech changes needing constant innovation, intense competition for talent. We just talked about that.
Yeah.
Potential ups and downs and financial results. And, the risks involved in selling new stuff, especially to big companies.
These are pretty much inherent risks in the cybersecurity world, aren't they?
Seems like it.
You've got the constant cat and mouse with attackers, the need to innovate or die, the global fight for skilled people, and economic pressures affecting spending. Acknowledging these risks is just being realistic.
Okay, let's pivot to the numbers, the key financial highlights. The big story seems to be growth, right?
It looks that way.
Total revenue jumped from about $6.9 billion in fiscal 23 to just over $8 billion in fiscal 24.
That's a healthy increase.
And breaking that down, product revenue was $1.6 billion, but the real heavyweight is subscription and support.
Ah, the recurring revenue.
Yeah, $6.42 billion. That's 80% of their total revenue. That looks like a really strong, predictable stream.
Absolutely. That 80% figure is huge. It shows the platform strategy is working, locking in customers. It's much more stable than just selling boxes. And growth in both areas shows healthy demand overall.
And it's not just top-line revenue. Their profitability looks better, too. Gross profit hit almost $6 billion in FY24.
And the margins?
Overall gross margin climbed to 74.3%, up from 72.3%. Interestingly, the product gross margin jumped quite a bit to 78.3%.
Right.
They say that's due to more high-margin software sales and easing supply chain problems.
That makes sense. Software is usually higher margin than hardware.
Right. And the subscription and support gross margin also ticked up to 73.4%. Basically, revenue grew faster than the costs to deliver those services. Suggests they're getting more efficient.
Yeah, those improving margins are key. It means they're not just growing, they're growing more profitably. The product margin boost is good, and the subscription margin expansion shows the recurring model is scaling well. Good signs of operational strength.
So how does that flow down to the bottom line? Let's talk operating income. Using GAAP, generally accepted accounting principles, it was about $684 million in FY24.
Which is up significantly from FY20.
Way up, from $387 million.
Huh.
But the non-GAAP operating income number is even more dramatic.
Okay, the adjusted figure.
Yeah, that surged to $2.19 billion. That's a non-GAAP operating margin of 27.3%.
Wow, okay.
And the difference, as usual, is mostly things like stock-based compensation, acquisition costs, amortization, the usual adjustments.
Right, and that non-GAAP figure often gives a clearer view of the core business performance, stripping out some non-cash or one-off items. A 27.3% margin is pretty healthy. It points to strong underlying profitability.
And ultimately, that leads to net income. For FY24, they reported $2.58 billion.
Billion with a B.
Billion with a B. Compare that to $439.7 million the year before. It's a massive jump.
Huge improvement.
Likely driven by that revenue growth, the better margins we talked about, maybe some other factors too.
That's a very strong signal to the market. It shows the strategies are really paying off on the bottom line.
One more key number, cash flow.
Yeah.
Their free cash flow, which is a non-GAAP measure of cash generated after operational and capital spending.
The cash they actually have left over to use.
Exactly. That also increased, hitting $3.10 billion in FY24, up from $2.63 billion. That's a lot of financial firepower.
Absolutely crucial. That free cash flow gives them flexibility. They can
Yeah.
reinvest in R&D, make acquisitions, pay down debt, maybe return cash to shareholders. It's a vital sign of financial health.
Speaking of returning value to shareholders, let's look at their plans there. First, share buybacks.
Okay.
Their board okayed another $500 million for repurchases back in August 24. That brings the total remaining authorization up to $1 billion.
$1 billion.
And the program runs until the end of 2025. They can buy shares on the open market through private deals, however management sees fit. But they do add the usual disclaimer. The program could be stopped at any time.
Right. Buybacks can return capital, potentially boost the share price by reducing the share count. It also often signals management thinks the stock is a good value. Increasing the authorization shows confidence.
But if you're holding out for dividends,
Not happening.
not anytime soon, it seems. They state very clearly,
Yeah?
never paid them, don't plan to.
No.
Their reasoning, they want to keep reinvesting earnings back into the business operations, expansion, growth.
Which is pretty typical for tech companies focused on growth, isn't it?
Yeah. So for shareholders, the potential return is mainly about the stock price going up.
Right. They're betting that reinvesting that cash will generate better long-term returns than paying it out as dividends. Focuses on growth.
But even without dividends, they make a point of highlighting their superior shareholder returns. There's a chart in the report showing their 5-year total return crushed their peer group and the S&P 500. We don't see the exact numbers here, but the message is clear. They've delivered significant value through stock appreciation over time.
And that long-term outperformance does back up their strategy, right? It shows that, historically at least, reinvesting has worked well for their shareholders.
So, wrapping things up, how do you assess the business moving forward? The report has this standard caution about forward-looking statements,
Of course, the future's uncertain.
but they clearly point to their strategic priorities as the engine. Network security transformation, cloud-native security, revolutionizing CCOPs, all driven by platformization and precision AI.
They're core focus areas.
They stress the need for constant innovation in this fast-moving cyber world. And their commitment to people and ESG seems baked into their long-term view. Oh, and they plan to ask shareholders for more shares for their equity incentive plan.
Which suggests they still need stock awards to attract and keep top talent, right?
Seems likely.
Look, the outlook seems pretty strong. They're in a market with constant demand, they have a clear strategy, and they're investing heavily in key areas like AI and platform integration. That should position them well. Their focus on people and ESG adds to that picture of building a sustainable business.
So to boil it all down from this deep dive into the 2024 annual report, Palo Alto Networks is doubling down on its integrated platform strategy. They're showing really strong growth in revenue and profitability, and they're returning value mainly through share buybacks, choosing to reinvest earnings for future growth rather than pay dividends.
Yeah, that sums it up well. Strong financials, clear strategy, focus on innovation. They're definitely a major force in cybersecurity.
Which brings us to our final thought for you. We know cyber threats are constantly evolving, getting faster and nastier, and Palo Alto Networks is betting big on this AI-powered integrated platform approach. How might their continued push in this direction actually change the way organizations like yours architect their cybersecurity? And thinking beyond just revenue, what other metrics, maybe things like platform adoption rates, customer churn, or even the measured effectiveness of their AI threat detection, should you really be watching to judge their long-term success and leadership in this absolutely vital field?
Good questions to ponder.
Thanks for taking the deep dive with us today.